Thank you for joining a Payments Cards and Mobile webinar in association with Visa. I'm Alex Rolf, the Managing Director of Payments Cards Mobile, and I'll be doing a short intro to this webinar before handing over to Smitha Shankar, today's moderator. From myself and all the panelists, I hope you're doing well and enjoying the last of the summer weather. Just a couple of housekeeping items before we get started. This is a live event, and we will have a live Q&A session at the end with all the panelists. However, please do feel free to send your questions in as we go along. If your question relates to a specific topic or speaker or indeed slide, please make sure you just note that down in the question so that we can quickly reference back to that whilst answering the question. Finally, as you may be able to see, there's a document view in the handout section, which sits at the right-hand side of your screen in the grey tab, and you can access that now. All the assets regarding this event, including the video recording, will be made available at the end of the show, and that means you can share with your colleagues or review the information again at your leisure. So for now, I'd like to introduce Smitha Shankar, Senior Product Manager of Visa, who will host the rest of this webinar. Welcome, Smitha.
Thank you, Alex. Good morning, good day, everyone. Like Alex said, I'm part of the Visa product team. I'm a senior product manager there, and it is my pleasure to be your host today. I represent a team of passionate product colleagues who work every day to bring products, solutions to SMEs across Europe. It's going to be a great discussion today.
Thanks, Mr. I'll leave you to it.
On our panel today, we've got Jason Hilton, who's our Head of Sales and Business Development for Visa Commercial Solutions. Jason and his team are strong advocates for SMEs across Europe, promoting products and solutions to make the lives of business owners simpler and more efficient. Jason, thank you for joining us, and I'm looking forward to hearing your views today.
Thanks, Smitha. Hi, everyone.
We also have Adolfo Laurenti, our Chief Economist for Europe. Given the breadth of Visa and external data Adolfo looks at all the time, a conversation with him is always insightful. I'm sure we'll hear some great thoughts from you today as well, Adolfo. And finally, let me introduce Ane Unamuno. She's a principal consultant at KAE. Ane led the research on the M of SMEs for us, and she will today distill the findings of this research into digestible insights. Ane, it's really exciting to have you here, and I can't wait to hear your views today.
Thank you. Hello, everyone.
Before we get into the discussion itself, let's take a look at the broad path that we're going to follow today. We're all here today to understand the M of SMEs, appreciate the opportunity they present, what they're looking for from issuers, and how you can help. We'll look at 6 key insights that we took away from the research we conducted into this segment. We'll touch upon macroeconomic environment that these businesses are operating in today, and we'll also talk about what medium enterprises are looking for and how they can be best served. Like Alex said, we will keep time for questions at the end, so please keep questions going. We'd also love to hear your thoughts, feedback, your experience with this segment, so please keep the conversation going in the chat as well. So, Ane, I'm going to turn to you first. Why don't you kick us off by summarizing what we mean by the M of SME?
So the M of SME refers to medium-sized businesses, which are larger in operation and turnover than micro and small businesses, but not on the same scale as large businesses. However, they do carry similarities of both. For this research, we used the European definition of medium-sized businesses that defines them as having between 50 and 250 employees and between 10 and 50 million euro in turnover, or less than 43 million euro in assets. Smitha, can I start by asking why did Visa decide to commission this research on medium businesses?
Sure. Mostly when we think about businesses, we often think about either the really large corporates or the really small businesses that are less than 10 employees. And this is reflected in the kind of products, propositions that you see out in the market as well. But in reality, the medium-sized businesses are a little bit different from both the larger ones as well as the smaller ones, and they present a big opportunity. So we commissioned this study to understand more about the medium enterprises and how we can help everyone serve the needs of this community better. Before we get into the findings of the research, let's talk about the methodology that we followed. Ane, could you provide some context here?
Sure. So for the research, we use both qualitative and quantitative research methodologies to gain insight on the medium segment. At a high level, we followed a three-pronged approach. One, we analyzed publicly available information to get a general understanding of the overall structure of the market and what solutions are already out there. Two, we conducted in-depth interviews with 47 key financial decision makers of medium businesses, such as business owners or finance directors. And we also conducted 6 interviews with senior executives from ERP and accounting software providers. And lastly, we also did a 20-minute online survey with over 900 key financial decision makers of medium-sized companies to gain an understanding of their attitude, behaviors, needs, and challenges.
Wow, that's impressive. Let's get straight to the findings. What were your key takeaways?
So we uncovered 6 key insights from the research. Number 1 is that the segment is crucial to the market's GDP. For example, in Germany, the total payments value for medium-sized businesses is estimated to be around 941.5 billion euro. And in the UK, it is estimated to be 634.8 billion pounds. The second key insight is that commercial cards capture less than 1% of that business spending, and they are most commonly used for online expenses. The third key insight is that bank transfer is a very popular payment method, particularly for B2B procurement spend, but it's also commonplace in travel, where companies use travel management companies. The fourth key insight is that many businesses manage their expenses inefficiently, often using Excel and other time-consuming and manual processes. Number 5, they are using multiple banking providers, and many have started to explore fintechs as well. And finally, there seem to be some misconceptions that are limiting the use of cards. And not to mention, they are a segment with huge opportunity. So let's discuss these findings in more detail. So if we look at their contribution to the economy, in the EU, only 0.9% of businesses are medium-sized, but they generate 17.1% of total value added in the EU's GDP, which indicates that they are a key driver of our economy. Their business activities generate all this value, but not much of their spend is captured on card. In fact, commercial card payments represent only approximately 0.7% of their total commercial.
So that's really interesting, Anna. It highlights there's a massive opportunity, I think, to capture their spend onto card. But of course, to do that, we need to get a better understanding of their behaviors and needs.
Exactly, and I think a great place to start is looking at the type of expenditure these medium businesses have. So international expenditure, for instance, is high across Europe, and those businesses with international spend or sales volumes, they typically hold bank accounts in multiple currencies to avoid the risk of currency fluctuations. With this in mind, it's no surprise that these businesses look for FX services from their banking providers. And to run it off with how these payments are made, typically bank transfers and SEPA wire transfers are the most common payment methods used with international suppliers. However, these actually differs to e-commerce expenses, which are often paid for via commercial card. And it's also interesting to note that fewer businesses spend online than internationally, with 63% on average spending online and 82% spending internationally.
And that's a very interesting point to me about the digital role that payments play in this space. We think usually of digital as a solution for the consumers, but what is happening in the commercial space, it's really something we should pay more attention to. It was something we were expecting to see. Clearly, digital is a solution to a whole set of frictions that are quite problematic for small and medium businesses. Speed of execution, location, the time-consuming processes that sometimes are driven by this acquisition really point to the comparative advantage to go digital. Now, clearly, the pandemic was an accelerant for all of these. We have seen throughout a variety of indicators. But what really caught my attention is the persistence of these in the aftermath of the pandemic. Momentum really persists. We have not seen transaction interest to recede or to return to normal. This is the new normal. And in some way, this is really creating the opportunities that may launch the segment to the next level.
Definitely. And speaking of increasing use of digital channels, this is something that we found when investigating how medium-sized businesses organize their travel arrangements. 48% use online travel agencies now, and 37% use travel agencies such as TMCs. So almost half of all medium businesses are booking their travel online. And from the insight you have just given, Adolfo, I think it seems that this will only grow. Although interestingly enough, businesses that work with TMCs often pay by bank transfer rather than card. And when businesses have not booked the whole trip with a travel agency, so hotel bookings, flights, and other incidental expenses, they are typically paid for with a company credit card. But still, some companies don't want to hand company cards to their employees. This is mainly due to lack of trust. And this means that employees have to use their personal card and then be reimbursed.
That's not ideal at all. It leaves employees out of pocket, and then they have to deal with all the admin of claiming the expenses back manually in most cases. Business as well then has limited insight or control over what has been spent, and the expense management process is time-consuming. Overall, I think things could be a lot more efficient.
That's a very good point, Smitha, and it brings us to why medium businesses are inefficient in managing their expenses. Our research revealed that spreadsheets are still a very common tool for expense management, with 43% of businesses still using them. However, it's clear that there is an interest in automating processes to increase efficiencies, which is not surprising considering the volume of payments is significantly higher than that of the small segment. But it's key that this is done in a way that is cost-effective for the business.
So, here I think it's a good time to point out where issuers could provide some real and meaningful support to their business customers. Not only supporting them with payments, but also becoming a true and trusted partner across their accounts receivable and accounts payable processes. It's been quite a tough few years for businesses, what with the pandemic and post-pandemic with resource challenges and high inflation. So in speaking with several medium-sized businesses across all industries, what they want is support in three things, really. Firstly, in reducing costs. Secondly, simplifying processes. And thirdly, in increasing efficiencies. So if they already have a relationship with you as a bank, as their issuer, and then you can help them achieve their objectives, that's a great way to really strengthen that bond, to increase the stickiness of that client, and to become the trusted business partner and banking provider of choice, essentially growing as they grow.
Exactly, I couldn't agree more. And incidentally, our findings highlighted that medium-sized businesses are using multiple banking providers. So there is more competition when it comes to who their main provider is. And the rise of fintechs is definitely playing a part in this. So 19% of medium-sized businesses use fintechs, mainly as their secondary provider, with some of the top reasons as to why this is the case aligning with what you just said, Jason. So one being that they offer lower fees, better interest and FX rates, which helps reduce costs. Second, they don't overcomplicate processes or systems, and this simplicity gives businesses one less thing to worry about. And finally, many fintechs provide access to wider services and additional benefits. So this could be in the form of access to a digital marketplace for all their business needs, access to an accounting software or spend dashboards, and so on. But this isn't to say that businesses are not satisfied with their current banks, because they are, particularly those businesses that are over 5 years old, so older businesses. And what we found that is that this is because businesses value having a personal relationship and good customer service. And they also value having access to an easy and accessible online banking portal that their current banks are providing.
So you mentioned there that businesses value a personal relationship with their bank. And naturally, I'm thinking that's in form of a relationship manager, a physical person. So is this common? Do many medium-sized businesses have actual relationship managers with their bank?
Great question. Yes, they do. In fact, over 90% have a relationship manager. And interestingly, one of the most common reasons to use a relationship manager is to get advice on how the bank can support their business growth, which supports your previous point, Jason. So that businesses are looking for their banks to play more of a supporting educational role and become a trusted partner. In spite of this, many businesses still have misconceptions about commercial card, which brings us to our final key insight. And these misconceptions do limit card usage. So some of the main misconceptions unveiled by our research include businesses being unaware of how commercial cards can improve cash flow, can help reduce the risk of fraud. Some also perceive cards as difficult to manage, which makes sense as many also are unaware of how features such as virtual card, spend controls, and expense management tools can give them more control over how business funds are used. However, we know this is not the case, and that using cards can actually bring lots of benefits to the business. So how can this be changed? I think it's very simple. I think education is key.
Exactly, and I think you hit the nail on the head there. And issuers are really in a great position to address that limited knowledge around commercial cards, especially with the help of Visa, of course. So as we discussed earlier, businesses are looking to their financial service providers for that support and for that advice.
You're absolutely right, Jason. That's a really important takeaway from all of this. Ane, out of interest, were there any findings that either took you by surprise or you were not expecting?
Probably the fact that many medium-sized businesses still use spreadsheets for admin and managing their expenses. So I suppose as consumers, we've seen so much digitalization and we can pretty much do or get anything we want in just a few clicks, not having to worry about the scenes, just the processes within the scenes. So these larger SMEs still using manual and very time-consuming processes seem so far from the digital world we are living.
Yeah, I have to agree there. 43% of businesses still use spreadsheet to manage their expenses. That's a clear case for simplification. This seems like a good time to discuss if there's any broader macroeconomic trends that are impacting this segment and like how these might help shape the behaviors or needs of this segment. Adolfo, what are your views here?
Smitha, I think we can step back to what Jason just mentioned a few minutes ago. We have gone through an unprecedented period of economic uncertainty and turbulence. Just to start thinking in the aftermath of the pandemic, not even the pandemic itself, the aftermath, with all the changes that were brought by pressure on supply chains, the transformation of the labor force, just to think of something as basic as how all our businesses are struggling and coping with the transition from work from home to hybrid, all the implications that it has internally. And this was just a step one. Then there was like what we have all been talking about, the inflation and cost of living crisis that kick in and the impact on energy and food and labor supplies and wages and salaries. All of these really contributed to the uncertainty. I would add that we are entering a third stage in this process, which is coping with the higher interest rates that inflation has triggered as central banks have stepped in and tried to bring prices back to sustainable level. And this is a major implication in terms of access to funding, the cost of lending, especially for SMEs. Clearly, there are implications in terms of foreign exchange swings. We just see over the last few days the higher volatility that is happening in bond market and in exchange rate. And on top of that, all of this is very short term. All of this is cyclical. If you step back and see of some of the broader societal challenges that we are seeing, there is all the themes of sustainability. We put a few on the slides, just a reminder. But clearly we have noticed how extreme weather events are becoming more and more common, how the public, the consumer, but the businesses themselves are really bracing to do more in terms of green transition and accounting for more sustainable practices. So it can be from accounting for carbon emissions, accounting for the carbon footprint, in terms of awareness, even before actions in this green transition, and what are the options to consider. On all these fronts, I think payments can be a very important partners, because by associating the act of payment with the measurement of all these indicators, we can really help businesses to become more aware and to make more informed decisions about what the options that lay ahead. So we have a role to play in terms of navigating all these realities that really goes from the short-term macroeconomic uncertainty to the long-term challenges related to the sustainability aspect of it.
Thanks, Adolfo. That's really valuable context to have. Jason, based on everything that we've heard so far from Ane on the research and Adolfo on the macroeconomic context, what do you think, what are your key takeaways for anyone wanting to serve these businesses?
Yeah, thanks, Smitha. So I think, as we've discussed throughout this session, there's a great opportunity for issuers to capture more business spend on cards. We discussed that at the start of the segment, but this part of the market is often high spending, so converting even a small percentage of that spend onto cards can really boost revenues in the bottom line. So given that higher spending, though, this segment really wants a tailored proposition, and one that rewards their spend and provides benefits and rewards that are really tailored towards their needs. And I think that's a big area that's still wide open, and it's not particularly well served across the industry. It's also a great opportunity for issuers to be positioned as that trusted partner and that knowledge hub for these businesses through the likes of, value-added services, which can open up many more customer touch points and increase stickiness. But to realize that, education is really what's vital here. So as we've heard from Annie, there's a lot of misconceptions about cards, which typically limits their usage. We're all aware of the benefits of using cards, like increasing cash flow or improving cash flow, reducing the risk of fraud, the ease with which you can manage them, helping control spending with various limits and merchant blocks, etc., and also the easier reconciliation of expenses. So benefits are well known to us, but not so much to them. So there's really an opportunity to do some myth busting here and to kind of shout about how using commercial cards can really help businesses reduce costs and improve operational efficiencies. And then on to Adolfo's point that he just made, there's lots of change happening right now. The landscape is changing through things like digitalization, increased sustainability, plus there's lots of economic uncertainty. There's going to be a challenge to navigate, so that's why businesses are looking for a trusted partner and an issuer that is best placed to be just that.
All great points, Jason. And you've done a great job of outlining what medium businesses need from their issuers. Just to expand a little more, what do you think the fundamental components of a good proposition should be to meet these needs?
Okay. I think, well, to put it simply, there's four key things that medium-sized businesses are really looking for in that proposition. So the first one is process efficiency. They want to boost their operational efficiencies, to reduce the time that they spend on administration so they can spend more time on doing what's core to their business. Secondly is around control. So the ability to set limits on where, when, and how much is spent is crucial, especially when issuing cards to employees. I think in brief, thirdly, there will be visibility. So it's really important for businesses to have a full view of all the spend in one place, not necessarily on various spreadsheets, of course, and at a high level or at an employee view, so they can easily track and manage their expenditure. And fourthly is value. So these medium-sized businesses are typically higher spenders, so access to rewards, discounts of all types of everyday spend is a real bonus. And the good thing is Visa can help you deliver some of these benefits to your medium-sized customers. But we also offer much more. So we've got our value-added services that help meet business needs beyond payments, and also access to our merchant offer program to help you reward your business customers without doing all of that heavy lifting, as we're constantly sourcing and adding new partners and offers for business card holders to get access to. Plus an ecosystem of partnerships to help you build world-class propositions. And added to that, we have our VCA, which is our Visa Consulting and Analytics team, our marketing team, and our Visa Developer Platform. So these are all on hand to help our issuing clients get to market quickly with quality solutions that really suit the needs of the business customers in this segment.
Brilliant. I think that's a great note to end on. Thank you all for sharing your insights. It's now time to take some questions from the audience.
Hi, Smitha. Well, thanks to everyone there for their insights. I can see that there are quite a few questions coming in. There is one thing that I just kind of wanted to ask, and it might seem a bit simplistic in the beginning, but what makes medium-sized businesses different to smaller businesses? I know it's quite a simplistic question, but I feel like it does help just to kind of set the two things apart.
Sure. I think as the lead on the research, it's probably logical for me to pass this one first to Anne.
Sure. So medium-sized businesses do share similarities with large corporations. So they often harbor ambitious growth plans, such as international expansion. They tend to have high growth targets and digital transformation initiatives. But in terms of differences, larger corporations usually manage a larger number of suppliers, both local and international. Their international presence as well extends beyond purchasing and also includes overseas sales. And overall, they require more sophisticated tools and services such as ERP systems or CRM systems, etc. While medium-sized businesses are starting to get more organized, like large corporates, and they are still generally small enough to have, management that may not always be professional. And they are still using, as we've seen from the research, processes and tools that are quite manual. And they are also more likely to have a preference for local suppliers as they have a better understanding of the local regulatory environment. And I would say, from a financial service provider perspective, another difference is that financial service providers base their support for medium-sized businesses more on their relationship rather than their reach and scale as they do for large businesses.
Thank you. Thanks very much.
Thank you, Alex, for getting us started off. And thank you, Ani, for a great response there. I can see a few other questions coming in. And Adolfo, there's a great one for you here. Do you think the economic uncertainty means that medium businesses are less likely to change their banking setup or provider?
Not necessarily. In fact, I think we can envision scenarios where that shift may become even more likely. I'm thinking to all the volatility that followed some uncertainty about the banking system earlier this year. It affected mostly U.S. banks, but I think it was a wake-up call for many businesses to think in terms of diversification, in terms of depth of the existing partnership, and to think in terms of what are the option B and the other opportunity. So in some way, it does not mean that existing partnership becomes entrenched, although it might be a time to do so if one of the key elements, as it's been described, is present, which is the partnership between the banker and the business. I think at time of economic uncertainty, there is a lot of reconsideration of the value proposition of the existing relationship. And that's where all we have been discussed today can really brought to the table. There are some businesses that sees a downturn as time to just retrench and get the defensive. But I would say that especially in the dynamic space of SMEs and the M in SMEs, there are a lot of businesses that take this as an opportunity to accelerate the transformation. And that's clearly an area where we can all participate and engage with some value-enhancing propositions.
Thank you, Adolfo. And I think there was an extension to that, which was, when do you see the economic environment stabilizing or feeling more positive?
Well, it really depends. I think this is one of those questions that would require some granularity as we just look around the global economy or just the regional economy in Europe. I think some countries seems to be better positioned to suffer less and to have a quicker recovery for a variety of reasons, but I think France, Spain, a couple of other smaller Mediterranean economies may be in that categories. There is all a story related to manufacturing that is holding back Germany and to some extent Italy and several other smaller countries that are fully integrated in the manufacturing supply chains in Central Europe. I'm thinking of Poland, Slovenia, Slovakia, Czech Republic, Netherlands, to some extent Denmark, and so on. So for this economy, probably it will get worse before it gets better. And then there is a story specific to the United Kingdom that it reflects the multiple transitions the country is having. It's not just the post-pandemic readjustment. It's not just the cost of living crisis that is going from a consumer prices in the situation to a higher interest rates and mortgage reset situation. In the background, of course, there is also the adjustment to the new trading reality with the European partners, the aftermath of Brexit. So in the case of the United Kingdom, we do not see a deep recession over the next 6 months, but quite frankly, it's a stagnation that is most likely to persist throughout 2024, even when other European economy will show sign of recovery. So it's a very nuanced picture depending where you are looking for.
Thank you, Adolfo. That's really good to know. At least there's light at the end of the tunnel. Here's another really interesting question. And Jason, maybe I'll send this one your way. So what are some of the use cases where we see more card payments being used by SMEs? And I think an extension to that is, why do you think those particular industries or payment types are more popular? And what's the strategy that banks or card issuers should use to address this segment?
Okay. Thank you for the question. And it's a good one, and it's one that we all grapple with all the time, even as Visa, as issuers, as merchants, I guess as well. Which is if you make a bank transfer, it doesn't typically cost too much money. In some cases, it can be free. In some cases, it's not. Right? There's usually kind of standard charge that will be applied in business circumstances. And if you look at the market as a whole, it is predominantly still bank transfer, ACH. By and large, that's it can be up to 90-something% of the market. So getting those to move onto card rails, there has to be something in it for both the issuer, but then also for the entity that's actually making that purchase as well. And then, there's a few things that spring to mind here. The first one is one of protection, right? If you use card, you are protected for that purchase that you've made or for that payment. And secondly is the ability to get additional information. So kind of the level 2, the level 3 data that's required within your industries. Now some of that is still in progress, but a lot of it is there today. So being able to reconcile your expenses much more quickly based on the information that you have in the transaction is something that's really beneficial. Those would be the top two. But if thinking about it more holistically, you have to be able to provide incremental value in order to change someone's behavior and move them onto card rails. The additional information, the protection are just two of those ways off the top of my head that I can think of.
Thank you, Jason. That's I think I completely echo your thoughts. I think another one that I am seeing is why does this segment not tend to have tailored propositions, and is it better to have tailored propositions by use case or just a common sort of vanilla proposition that cuts across the board? And I don't know, Jason, do you want to take a shot at this one as well?
Sure. Say that one again then, Smitha.
Sure. So I think the question is, are medium enterprises today getting tailored propositions? And would it make sense to provide them propositions tailored by use case or just a one-size-fits-all?
Yeah, it's a good question. And I think the answer is no. And you can see why. I mean, if you look at the very start of this presentation, where there was I think there was a slide that came up that said it was a really small segment, point something of a percent, yet it made up 17% of the amount actually spent, of payment volume, etc. I think that's why, right? So you will be looking at a really small segment that actually produces a large amount of volume and activity. And I think banks have a challenge when it comes to looking at that in order to get their own economies right and provide that real personalized service for medium-sized businesses. Sometimes it's will a small business offering fit, and then we go straight into the large market offering. And it's really getting that mix correct, where I think there's a real opportunity and kind of almost a niche in the market. We've seen some players around Europe that have really excelled in this space. I won't name names, but I would encourage you to take a look at some of those out there, where they really have targeted this kind of higher spending capacity and offering, some kind of a reward, be it cashback or something else, really kind of is tailored towards that specific segment of the market. That's been really quite enticing, obviously, for a medium-sized business. But I think recognizing that there are different needs, as we've discussed, the need to reconcile expenses, the need to distribute funds differently, the needs for your employees, potentially, we mentioned there 50 and above, I think, employees. Like having 50 cards out there requires incremental infrastructure. It requires incremental resource to manage. On the previous page when we talked about process efficiency, control, visibility, and value, all of those four components packaged up into a solution and into a proposition can be really beneficial for both the medium-sized business, but also the issuer's bottom line as well.
Great. Thank you, Jason.
We are more willing to help you all get there, by the way. So please reach out.
Great note to hit time on, Jason. Unfortunately, that's all we've got time for today. Thank you, Jason, Anne, Adolfo, for joining me today. It's been great hearing your views. Thank you, everyone in the audience, for joining, and I hope you've enjoyed this discussion. We'd love to keep this dialogue going. If you'd like to hear more, we'd encourage you to get in touch with your visa representative. As a reminder, there's an infographic that's in the handouts. Please download your copy. Also, I know several people have asked if the recording will be available. It will be available, as will the slides. And please reach out to us. We're always happy to talk SME or M of SME. Thank you all for your time. We're always here to help and support you and to help you deliver great value to the M of SME. Thank you and goodbye.